Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And today we're looking at Portland General Electric, or PGE, and folks. They've been busy making some big moves, a deal that is going to reshape their operations quite significantly. Before we dive into the nitty, Gritty, if you love getting these behind the scenes looks at what publicly traded companies are up to, do us a favor and hit that subscribe button. And if you want to chat about these filings with other finance enthusiasts, join our Discord community. The link is in the description below. So PGA has officially announced a major asset purchase and service area transfer agreement with Pacificorp. This is not a small deal, folks. PGA, through a new subsidiary, is buying up a chunk of Pacificorp's operations. The deal was announced on the 17th of February 2026, and it's pretty extensive. They're acquiring assets and taking on liabilities related to the electric transmission and distribution business that Pacificorp serves in several Washington counties. We're talking Lewis, Yakima, Walla Walla, Columbia, Garfield, and Benton counties. They are also picking up ownership and operation of some significant power generation facilities, including the Chehalis combined cycle gas turbine and wind farms like Goodnoe Hills Wind and Marengo Ionite 2 Wind. This means PGE will be the provider of electric service in that entire service area. Now, the price tag for all of this is substantial. PGA will be paying $1.9 billion in cash. And that's not all. To raise an additional cash payment for the value of specified assets at closing. And this total consideration is subject to adjustments. Plus, there are certain liabilities that are specifically excluded from this deal, such as those related to wildfires outside of Washington, which is a pretty important detail to note. To fund this massive acquisition, PGA has lined up some significant financing. They entered into a debt commitment letter with Barclays Bank PLC and JP Morgan Chase Bank. Now these banks are committed to providing up to $1.9 billion in senior unsecured bridge loans through a 364 day credit facility. This is essentially a short-term loan to bridge the gap until more permanent financing is secured. But wait, there is more. They've also engaged these banks to arrange an additional $681 million in senior unsecured delayed draw term loans, with the banks already committing to provide $476.7 million of that. The proceeds from these debt facilities will be used to help finance the transaction and related fees and expenses. PGE isn't going it alone entirely on the equity side. They expect to finance up to $600 million of the cash consideration with equity commitments from Manulife Infrastructure, Fund the Third LP and its partners. The remainder will come from their debt financing. This also means that Manulife Investment Management will become PGE's joint venture partner in the ownership of this newly acquired business. So it looks like a partnership is forming here. This deal, as you can imagine, is not a done deal yet. It is subject to a whole host of customary closing conditions, but the big ones are regulatory approvals. They need sign-off from various bodies, including the Hart-Scott, Rodino Antitrust Improvements Act, the Federal Energy Regulatory Commission, also known as FERC, and several state utility commissions like the Washington Utilities and Transportation Commission, Oregon Public Utility Commission, and others in California, Idaho, Utah, and Wyoming. A key condition is that these approvals must be obtained without the imposition of an unduly burdensome regulatory condition, which they've cleverly abbreviated as a burdensome condition. This is where things can get tricky, as regulators can add requirements that make the deal much less attractive. The agreement also has a termination clause with an outside date of the 15th of August 2027. If the deal isn't closed by then, either party might have the right to walk away, though this outside date can be extended. And if the deal does fall apart, there are some hefty termination fees involved. The buyer, PGE subsidiary, could owe the seller Pacificorp $35 million if the deal fails to get antitrust or FERC approval, or for other specific reasons related to a WOTC determination on the asset value. On the flip side, Pacificorp could owe PGA a $35 million fee if certain state regulatory approvals are not obtained, or if they face a burdensome condition from decommissioning proceedings or other multi-state protocol outcomes. So both sides have significant financial skin in the game. Shifting gears slightly, PGA is also releasing its financial results for the quarter and year ended the 31st of December 2025. We are furnished with a press release announcing these results, and they are also holding their quarterly earnings call and webcast. They've provided a slide presentation for this earnings call. While we don't have the full financial tables here in this particular filing, the press release and the slides are often where you'll find the key performance indicators. We'll be looking closely at revenue growth, profitability, and any changes in their debt levels or cash flow, especially in light of this massive acquisition they're undertaking. Even without the detailed spreadsheets, the announcement of financial results always gives us a pulse on the company's operational health. Now, the risk factors section, or as they call it, forward-looking statements, is always a good read. PGE is warning investors that their projections involve risks and uncertainties that are difficult to predict and could significantly affect their financial results. They specifically mention the ultimate outcome of the transaction, their ability to close the deal, the conditions to closing, and crucially, whether they can obtain the required regulatory approvals on favourable terms or anticipate benefits within expected timeframes. They also highlight that integrating these newly acquired assets could be more difficult, time-consuming, or costly than anticipated. This is where they try to manage expectations and tell you what could go wrong. The full agreement itself is filed as an exhibit, which is a weighty document. They've attached it to give investors information about its terms, but they are very clear that it's not intended to provide factual information about PGE, the buyer, the seller, or the transferred assets themselves. The representations and warranties are made for the benefit of the parties to the agreement and may be qualified by confidential disclosures, meaning they may not reflect the actual state of affairs and investors shouldn't rely on them as absolute facts. So, what is the big picture here? Portland General Electric is making a bold, aggressive move to grow its business by acquiring a significant chunk of Pacificor operations in Washington. This is a transformative deal that, if successful, could significantly expand PGE's footprint and customer base. However, the success hinges on navigating a complex regulatory landscape, the sheer number of approvals required, and the caveat about avoiding burdensome conditions means there is a real risk that regulators could impose terms that either kill the deal or make it far less profitable. The financing package, while substantial, also indicates a reliance on debt which will increase PGE's leverage. The partnership with Manulife is an interesting dynamic, suggesting a co-ownership model for the acquired business. The company's financial results, which they are also announcing, will be crucial to watch. We need to see if their current operations are strong enough to support this massive debt undertaking and integration effort. Any signs of weakness in their existing business could heighten the risk associated with this large acquisition. Ultimately, PGE is betting big on growth through acquisition. The company's direction is clearly leaning towards expansion, but the path forward is fraught with regulatory hurdles and integration challenges. The key question will be whether they can successfully navigate these complexities and realize the projected benefits of this deal without incurring excessive costs or risks. It is a high-stakes gamble that could redefine PGE for years to come. Alright? That is our breakdown of Portland General Electric's latest filing and acquisition announcement. What is your take on this massive deal and what they're signaling for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.